So hi, I'm Steve Locke, and I'm head of fixed income, senior vice president and portfolio manager at Mackenzie Investments. And I manage a range of fixed income products for IG, including the I-profile fixed income private pool. Well, certainly there's a lot going on in the financial markets these days, and the dominant themes are coming from these big macro issues of the day. The coronavirus being a global issue, the oil markets and the dislocation there being another one, impacting Canada in particular as well. So when we think about these big risks and these big events, there's oftentimes a lot of price movement and price dislocation in both equities and in corporate credit. Well, that gives us some opportunities to flex our risk management, which we've been doing through these very volatile days, but also opens up opportunities for us as we look ahead. So we manage a range of products, of course, for IG, but one of them in particular that we focus on is, of course, the I-profile fixed income private pool. Now, this is a high-quality portfolio of fixed income instruments, includes government bonds and various types of corporate bonds in the portfolio. As a high-quality oriented pool, it's appropriate for any investor, and it should form a building block of a well-diversified total portfolio for a client. Well, the current market environment has been very volatile. We've seen government yields coming down quite rapidly, but corporate bond yields have been rising in this environment, reflecting the different risk conditions currently in the market. So we've been doing a lot of things. Now, first of all, coming into this environment, we were acting more defensively, lowering our high yield weighting in the early part of this year and upgrading corporate bond quality and lengthening the term to maturity in portfolios. But what's important now is what we're going to see going forward. We've already been increasing slightly our investment grade or high quality corporate bond exposure. And that's because we're seeing some very cheap corporate bonds out there. We are doing a lot of risk management still, thinking about the risks that we're going to see going forward, and obviously using our credit skill to select carefully those corporate investments. I think it's important to remember that the current environment that we're in is not going to last forever. So we have to take advantage of the opportunities that are starting to come our way as investors. It's important to stick to our risk management disciplines, and that's what our team does extremely well throughout the credit cycle. So we're looking at this as opportunity to invest, but also continue to manage risk. And I think this is an important thing to remember. Active management for investors and advice for investors really pays off in this type of environment in particular.